Barclays has placed the booming African market firmly at the center of its growth strategy, and joining us for more on this is Kennedy Bungane. He's the CEO of Barclays Africa. Thanks so much, Kennedy, for joining us this morning.
Good morning. Thanks for having me.
Well, where we've seen South Africa's Absa Group combine forces with Barclays Africa, let's take a look at the strategy you're pursuing African growth with at this stage. What's your game plan?
Well, Barclays has made a firm choice that Africa is one of its growth markets going forward. We're positioning ourselves in Africa to become the go-to bank here by firstly leveraging our deep local insight in local markets. We've been in some of these key markets for almost a century. Secondly, to build a strong regional bank, a combination of Absa and Barclays Africa entities to be led from here is important in this regard. And then lastly, to leverage better our global bank, which gives us access to global markets that are such a key driver for development in the continent.
Let's extrapolate on the synergies that are going to be extracted here and what we're looking at when it comes to this combined force, what it actually means for customers doing business with the bank.
Well, what it means is that our customers and clients in the continent will have the only fully local, fully regional, and fully global bank, able to drive the kind of product innovation and product penetration that help meets their demands. And the kind of customer client segments I'm thinking about here are in this integrated value chain that we're seeing evident in Africa today. At the very top of the hierarchy, the global firms that are driving global demand in natural resources from Africa to the east to other parts of the world. They need global access. They need cross-border finance, trade and investment that a global bank like Barclays is able to offer. In the middle, this global demand has driven a significant need for development of infrastructure, road, rail, electricity, dams, and a strong regional bank in Africa, such as Absa, in Barclays is able to offer this. And then, of course, the big story for Africa going forward, the rise in the consuming class that requires deep local insight and knowledge to offer customized solutions that are able to take advantage of technology as a significant enabler for banking. Barclays is able to play in all of these three chunks as a fully global, fully regional, and fully local bank for its clients and customers.
Let's hone in on the money flow specifically that we're seeing right now. Where are you seeing money coming into the continent? Which are the sectors that are standing prominent on the radar screen right now, and which countries specifically?
Africa is in vogue, and so the pools of resources are universal. Still leading, as you will imagine, pools from the US, the UK, France, the traditional providers of capital into the continent. But as the UN report released this past Monday indicates, increasingly the BRICS countries are coming into play here. 25% of FDI flow into the continent in the last year came from BRICS countries, with China and South Africa in the clear lead. What has been most interesting, though, is where the money is going to. You would have imagined that the natural resources, which have been this big part of the last decade of growth in the continent, take a huge chunk. Well, they only account for 10% of the deals and 25% of the value for FDI in the continent, with manufacturing taking over 25% and the service sector over 50%, speaking to this consuming class that is driving the economic engine of key markets in the continent.
That's exactly what's gotten the interest of these emerging countries that you've mentioned as well, the likes of China, the likes of India. So let's look at the China-India dividend specifically and how that's contributing to your strategy, how Barclays specifically is positioning to leverage off the kind of trade we're seeing between Africa and those emerging countries.
Wonderful. And let me just make a good example here, because we've got in Africa the 2012 leading the top EMEA sovereign bond issuance actually came from Africa. It was Zambia's issuance of what was an interesting story with the boom in Zambia taking place. Barclays was honored to lead its first debutant Eurobond of $500 million. It was 10 times oversubscribed, over $10 billion of money from the West, the East, from asset managers came to support this issuance. And this is exactly the role that Barclays is best positioned to play in assisting Africa to leverage off its growth trajectory, to be at the end-to-end of both the public and the private capital pools in the US, in the UK, in G7 countries, in China increasingly, and Latin America, to customize these pools of resources and package them such that sovereigns in the continent and large multinationals in the continent can access them to finance their growth story.
Yeah.
Whether it is big capex programs, such as was the case in Zambia with infrastructure, or operational expenditure financing. Barclays, because of its reach in China, in India, but also in the traditional pools of capital, is best placed to play this global cross-border bank for the continent.
Of course, we've been hearing the song sung around, opportunities that are looking to be leveraged off when it comes to investment opportunities on the African continent. Let's look at ease of doing business here. I mean, when it comes to regulation, we've had all that's unfolded in Europe's banking sector really put in the spotlight the regulatory environment. What's your assessment of Africa's regulatory environment at large? We've been talking about at the desk South Africa's regulatory environment certainly having held us in good stead.
Exactly. Well, it's actually the case in most parts of the continent. Only 20% of Africa's economies were significantly adversely affected by the 2008 global financial crisis and even the global economic recession that followed. And so there is a resilience that is evident in the continent, not just in South Africa. However, regulatory pressure is really quite ubiquitous. We're not going to escape it, whether it is Basel III or tightening of how banks operate gradually in the continent. It is happening. It is something that I think will help position banking that much better going forward. Barclays and Absa are at the forefront of this, making sure that our practices actually meet the highest conduct standards from regulators.
Just how challenging a feat is that to accomplish, where you're looking at a host of territories with different regulatory environments, and different requirements being placed on their banks operating in the respective territories at this stage?
It is quite challenging, but it is part of the evolution of the industry. The banking sector in the continent is a key contributor to local economies, but it's also a key part now of the global system. And so the stuff you just cannot avoid. In the different countries, and Africa is not a homogeneous entity, it's 54 different countries, 54 different regulators. As Barclays, we've got a very clear principle around continued engagement with regulators and local authorities, wherein we respectfully affirm on things that are a global standard that we must adhere to as a global bank, and respective of local nuances, but also very firm to be able to agree to disagree on local nuances that just do not make sense from how we comply with a global set of standards and compliance that is expected of us by our regulators. In terms of the Absa purchasing of the Barclays Africa entities, we are confident that our primary regulator, the South African Reserve Bank, will find that our conduct, our compliance, whether it is capitalization or standards, in all of our Barclays Africa entities will be up to scratch.